So I may take this a number of different directions, and I didn't prepare a lot. It was a busy week for us because we had our annual meeting. What I did do, because I thought it would be interesting and maybe helpful to you, is I tried to think of one of my companies that I think does a really good job in their board meetings of providing an update in general across the entire business, and then I think they do an especially good job of updating us on kind of talent acquisition and how it's going. So instead of creating my own deck, I took an old deck of theirs, and I'll talk a little bit about the company in a second. But maybe staying high level for a second, maybe I'll just mention my background for a second so you understand my perspective, and then I'll try and say a little high level about just kind of how boards work, what we're looking for in general, how we interact with our companies, because that might be helpful, and there might be some clarification there that's helpful. And then I would like to sort of use some specific examples from the deck, if that's okay. So and I'll go super fast. My background, I've been in high tech for 29 years, which makes you feel wicked old. But I was at 3 venture-backed software companies for 16 years. So I was on the other side, grew up through product marketing and sales. First company was acquired. Then I ran my second company at a young age where I was too young to know better. And then I moved up here to Seattle and ran Half of Real Networks from 96 to 2001. That's how Dave and I came to know each other. So, and those were very rapid growth days where my group grew from 30 people to 700 in 4 years. So I spent a lot of time recruiting people. We had inside recruiters, we had outside recruiters, and so I have a lot of perspective that comes from that experience being kind of on that side of the table, and then a lot of perspective as a board member. So then the last 11 years I've been a venture capitalist. I spent 7 years at a firm called Fraser Technology Ventures, and I'm still on a couple boards for them, including one that's public called Control4. And then I joined Madrona 5 years ago, and I'm on 5 boards for Madrona, including another company that just went public about a month ago that I'll tell you about, or actually 2 or 3 weeks ago, called MaxPoint. And that's the company that I thought would be instructive to maybe talk about some of what's happening at that company. So one thing I would say generally is that, but by the way, has anybody here ever been to a board meeting, a company board meeting? Okay, Dave. Right, so the whole thing, that in and of itself might be a bit of a mystery and might be worth explaining a little bit. I think the way I would start off at a high level is most boards consist of the CEO, the venture investors, us, and usually an independent director or two. And the formal board business is usually a monthly or 6-week or every quarterly meeting. And that's a fairly formal meeting where the CEO will walk through an update on the entire business of the company. If it's a pre-product company, the update may be mainly about how the company's doing in terms of getting the product out the door. If it's a post-product company, and by the way, most companies we fund, when we fund them, they're not at a product yet. So our companies go from a stage where most of what they're updating us on is how the product's going that they're building. Then they shift to a mode after they've shipped the product of providing a more full update on how's the business going, customer adoption, revenue creation, that type of thing. So the updates become somewhat about product, more about financial operations, and then they'll provide a deeper financial update on cash position, net income, things like that. And then eventually, as they scale, you'll talk about more strategic things like new businesses that you might be getting into and that type of thing. So most board decks have a pretty straightforward structure to them where you're updating on the business, revenue, net income, cash use, product progress, customer progress, things like that. I would say actually most of my companies don't do a great job of doing a deep dive on hiring. Hiring is often sort of thought of as it's not the kind of thing the board usually jumps into a lot unless there's a problem. So like if the product's late because we're not hiring enough engineers, there's going to be a lot of board scrutiny around why is the product late, right? Or if we're behind in revenue because we haven't hired enough salespeople, there will be a lot of questions around that. But it's often one of those things where unless the CEO flags that it's not going well and that's manifesting itself in us being behind at something, most boards aren't going to dig into a lot of detail around that. And I'm not saying that's good. I'm just saying my experience, having been on, I don't know how many, 20 boards now, is that most boards don't dedicate a specific amount of time to just talking about talent per se. The good companies do, and meaning, and I'm not just saying that because that's what you all do for a living, is to be self-serving and make you feel good about yourselves. Hopefully you all
already do.
But like the companies that I think really are all over it, do a couple things that I would say most companies don't. They will do a basic level of reporting around hiring. How's our engineering team building? How's it scaling? They'll do good reporting on where they're at relative to sales hiring. The really good ones will go deeper than that. They'll talk about what's the overall quality of their executive team. And they'll do a closed session. So another thing I should back up and talk about a little bit. Most board meetings, the whole executive team of the company is invited to the board meeting, most sort of VP or C-level folks. But then there's usually a closed session where only the CEO is in the room with the board members. And one of the approaches that I really like is the CEO that will, on some level of frequency, maybe it's every 6 months, maybe it's once a year, really do a review of their team and how they're doing and share that with the board. Because one thing you know about these companies when they grow super fast, sometimes people's jobs outscale them, and so it doesn't mean that person doesn't need to have a job at the company anymore, but sometimes you need to bring in someone over the top, or you need to work really closely with that executive to make sure they're continuing to scale. So the really great companies, I think, do, and this is a place where I think you all could help, do a great job of updating the board, not just on quantitative hiring, like are we ahead of, did we hire all the people we were supposed to hire or not, and how do we feel about them, but they'll also do a really good job of updating kind of the overall just quality of the executive team, and also where do they feel like there are going to be challenges ahead because someone's likely not to scale fast enough, and then giving us more visibility into that ahead of time gives us a sense for where there might be risks and where we can be helpful in terms of trying to recruit, because what we're trying to do as venture board members is help with recruiting, which is why we have our own team here at Madrona, help with strategy, and help with connections to customers and other partners. So so that's one broad thing I wanted to say. The other broad thing I wanted to say was most of the work I do with my CEOs is not in the board meeting. So I think when most people hear about boards, the word itself implies that, well, all the work's done in a board meeting in a room like this where you meet every quarter and everything happens, and then we leave for 3 months and then we show back up again and we hear how it went. I mean, most of the work I do, I was up at 6 talking to one of my CEOs this morning, Martin. I talked to Joe at 8. I mean, a lot of it's probably a lot like your work. There's formal meetings where you do stuff, and then a lot of the work is done separate from that. So what will often happen is, for instance, if a CEO is going to conduct a search, they'll usually lean heavily on the board to help vet the candidate, if it's an executive search, and sell the candidate, and maybe source the candidate, right? So they'll ask us, do we know people? And then so I probably, every week I probably have 3 or 4 interviews for my CEOs of companies, of executives that are being recruited into those companies. So, but a lot of the phone calls I have or meetings I have with my CEOs are informal. I'll get an email. Joe sent me an email today from Max Point. Hey, can you help me with this? And so I think it's good for you to know that that's how we work with our companies, because the word board implies that it's always a super formal thing. It's often not. So maybe I'll pause for a second. Is this helpful in terms of giving you just kind of a broad overview?
Yeah. I have a question on when you're talking about sort of having the CEO give a review of the executive team to the board. How much of that are you looking to hear already the CEO thinking about solutions to those problems that they're anticipating, or is it just sort of a heads up, we know it's a potential problem? If they leave out and we're going to solve it, we think we're going to solve it by XYZ, is that a flag for you that they've not come with a solution at the same time as presenting the challenge, or is it personal preference?
Yeah, great question. I think so. I think any board topic, we always like it more if the CEO flags the issue and then explains the dynamic. Here's, for instance, let's say our VP of sales, we're worried that our VP of sales isn't scaling, or it wasn't the right fit, or we're behind plan. And this happens all the time, right?
Mm-hmm.
I mean, most companies go through some period where performance isn't, the company's revenue performance isn't as good as it could be. And so the question will always be, why is that? Is it the CEO, is it the VP of sales fault, or do we have the right VP of sales, but it's something, the product could not be right, could be not, could be mismatched, or the market timing may be different than we thought, or competition could be fiercer than we expected. So could be 20 reasons why revenues aren't scaling. The classic CEO reaction, especially a junior CEO, is, it must be the VP of sales. There's got to be something wrong with VP of sales. And so I really like it when the CEO takes any problem, whether it's an executive, question, and sort of cases a joint, tries to break down what's really happening here. Do we really think it's a personnel issue? And then what are that person's strengths and weaknesses? So and you guys know lots about doing reviews and 360 reviews and distinguishing between performance and skills. That's a big thing that we often ask our CEOs if they're going to explain to us why they think an executive is or isn't performing as well. We try and differentiate between performance and skills. Sometimes someone will have a great year, but there's still a skill deficit relative to what they need to have to be a great performer. Or sometimes someone has all the right skills, they just didn't have a great year. And their product didn't ship on time, but they're still a great engineer. They just ran into issues and couldn't work through them, or market took longer and sales were behind. So anyway. So I'm going to rifle through this pretty quickly. So MaxPoint just went public. So because of that, I picked a board deck that's 5 quarters old. So you're not seeing anything in here that I can't show you. But this is a company of ours. They're actually in North Carolina, which is a little off strategy for Madrona to have a company that far away. But they've grown very quickly. So we funded them almost 4 years ago. They're in the geo-targeted advertising space. So they have a big tech team. Actually, a lot of recruiting challenge dynamics. They're headquartered in Research Triangle Park. They have an engineering office in Austin because that's where one of the co-founders is. And when we funded them, they had 1 salesperson in New York. Now they have 17 sales offices in the United States and 1 now in London. And I should know exactly what their employee headcount is, but I'm going to say they're at 350, and they were probably at 35 when we funded them 4 years ago. And they've grown revenue from $4 million the year we funded them, which was late 2010, to more than $100 million last year. So they've been growing very rapidly. They filed to go public and completed that a couple of weeks ago. So I think these guys just do a really good job in general of communication, and especially at a board level. So we meet as a board about every 6 weeks. This is a January board deck, so that means they would have just finished a year, and often a January deck will be a little bit different than the other quarters of the year because they're kind of doing a wrap-up of what happened in 2013 in this case, and then kind of a preview of what's going to happen in 2014. But I think this is a good deck. There are a few things that I'll talk about that they don't have in here that relate to what you all do that I think would be useful to talk about as well. So anyway, this is kind of a typical flow. They'll give a update of how did Q4 go because that was a quarter that just closed. They were presenting in January. So this is just kind of how most CEOs communicate. They'll do a quick high-level update, and you can see most of the focus initially is on revenue, how the product was working. It turns out they launched in the UK that quarter. Then this is a detailed view of their P&L, which, as most people know, revenue, all their expenses, how they did on a net income and cash usage basis. So, these are the things that the board is going to focus on the most. And a lot of times, hiring or personnel issues are going to tie into this. Like, I would look at it and I would say, gee, if we were behind in revenue, is that because we were behind in hiring salespeople? Or if expenses were out of control, did we overhire in an area? If the product was late, are we behind in hiring engineering? So again, a lot of the personnel-oriented questions, we have talent questions, are going to come from, is there something that didn't go well in terms of the financial progress of the company? Again, I'm not saying that's always the driver or the reason that the topic should come up, but it usually is. So then Joe does a good job, I think, of presenting this dashboard, which shows just the hiring update for the year, actual and planned by category, by quarter. So I don't have any other companies that do this. I should make my other companies do this because it's super helpful, right? And so it's just a simple model that shows us how many employees at the company at the end of 2012, how many at the end of 2013, what the plan one was, what the actual was. So you can see they actually overhired a little bit. They were 7 ahead of plan, but we'd agreed to do that, by the way, during the year. So the other thing the board will be unhappy about is surprises, of any kind. But the CEO who overhires ahead of plan without asking to do that, that's we don't like that, because they're going to spend more money and use more capital, and those are things we're trying to pay close attention to. But Joe has a great rhythm where about 3 or 4 months into every year, he will checkpoint with the board, and usually he'll make a recommendation to increase spending, typically because he's ahead of plan on revenue, which is the happy occurrence, right? The sad occurrence is the one where, companies behind, their revenue plan for the year, and they need to, ratchet back hiring, and then that's what I can imagine also can make your lives difficult, right? Because you're in the middle of searches, you're trying to get new people onboarded, and when those plans change, there's nothing less fun than starting a project and having to slow it down. But Joe does a nice job of keeping the board updated on hiring. So then what he'll do is he'll kind of drill down into different areas. So in this case, 2013 was a really big year for ramping up their sales team. So he'll talk about how many salespeople there are in each region, by quarter, how many we thought we were going to hire, how many we ended up hiring. So this is all what I would call pretty tactical. It's less executive driven. And in this case, the big challenge for this particular year was sales hiring. In the early days, it's often engineering hiring. Like if Visible, one of my earlier stage companies, were here, they would be, Aaron's all about hiring that first group of 10 to 12 engineers to get his product off the ground, and he's doing a good job of that. But we do spend energy in those meetings talking. One thing we don't go into as much detail on, but maybe we should, is just hiring dynamics. I mean, so you might often ask, do we have visibility into specific offers or what we're paying people or stock option levels, things like that? Usually what we expect our companies to do is to have a template and ranges. So, if Joe's hiring engineers or a director of marketing, what I like to see is a table that just shows the levels in the company, C-level, VP, director, manager, individual contributor, and staff, whatever the right words are, and then what the cash comp range and option, equity range is on a percentage basis, described as a percentage of the fully diluted outstanding shares of the company. So, is our range for a director, 0.25% to 0.75% for a Series A company? I like to see that model. It makes board approvals on hiring go, super streamlined. And it's nice to see that at the beginning of the year, so we sort of all know what's the market looking like right now. So it's nice for us to know, hey, if Aaron's going to hire 6 more engineers this year, and engineers are currently $130,000 a year and 0.1% equity or whatever, I'm making these numbers up, they might be close. It's good. It's nice for the board to know, okay, that's the overall impact this year on hiring, and then it'll be pulled together in a more summarized way. But we don't tend to go deeper than that. So we don't ask, hey, how come you're paying that director of engineering this much, and how come you're hiring that engineer? We just like to know the hiring's in the ranges. Ranges make sense to us based, frankly, on the data that we, I think you all know we do this survey that probably all of you participate in, where we ask you to go collect data, we anonymize it, pool it together, and then we'll usually take that range data, look at it relative to the community data that we've built, and sort of say, hey, do those ranges feel right? But beyond that, we don't tend to get involved in that level of decision. We're going to approve the overall budget, the overall spend for the year, the overall number of hires, and then, frankly, it's up to the CEO to go make them. Does that make sense? Any questions so far?
You like to see that model just at the beginning of the year, or
Yeah,
is it worth checking in kind of halfway through to see, have we kind of skewed off model? Or is that?
I think doing it at the beginning of the year is great, and then if there were a big variance, that would be great. Like if you all were finding, hey, I'd love it if my CEO said, we entered the year thinking we were going to be able to hire engineers for $110,000 a year, and Google and Alibaba and Facebook have bid it up to 130, and that's just what we're going to have to get used to for the rest of the year. Not because it's probably going to make a massive impact for a relatively small company, but it's still nice to know, right? And also it's nice to know that dynamic too if hiring is behind. I mean, almost every one of our companies, in Seattle is wrestling with hiring great tech talent. I mean, how many of you is hiring great engineers hard and expensive right now? Right. I mean, if someone's hands down, then we need to go raid employees from your
No. I was nodding instead of raising my hand.
Right, but so like all of our
Yeah.
companies face that, and so that's an area too where we probably should do more as a board to push our companies on what techniques and tactics are they using to get over those hurdles, right? And that's probably a great brown bag lunch. I mean, I know our talent team's done a lot to coach our recruiting, our CEOs on how to recruit, our heads of engineering how to recruit, but we probably can't do enough there because it's hard. I mean, you guys know. I'm just going to rifle through a couple of other quick things. So these are just other business updates that a CEO will provide. It doesn't necessarily have anything to do with their talent, but this is a specific update on how one of their businesses is going. These guys do a fun thing where they'll actually do some customer case studies, which are super fun, just for us to, and these guys, their product helps drive customers into stores to buy products. So they sell to big brands like Barilla, the guys who make noodles. So anyway, they do some really cool things to give the board some visibility into not just how many new customers did they land and how much revenue did they generate, but they'll actually take some case studies and let us drop down and look at specifically. So anyway, as you can tell, I'm a pretty big fan of how these guys communicate with us. These board meetings, end of year board meetings, tend to be very financially focused. So a lot of boards will take a different board meeting to drill down into something. Like when MaxPoint does a big product launch, 80% of the board meeting will be about the product, and then we'll still do the customary, go through the financials, go through, hiring update, but the main focus is on product. If they're doing a big marketing launch, the focus might be on marketing. Or we've had ones where this company, there was a period when they were really struggling with sales performance, and so a big chunk of that meeting was about how we're building our sales team. And you might find this interesting because it does overlap with what you all do. They were just learning a bunch of things about what types of salespeople to hire. Joe is very metric driven, so in addition to financials, he will track things like, you've probably heard of CAC ratio, which is, if not, I'm happy to describe it. CAC ratio basically is the ratio of what you spend on sales and marketing relative to the amount of revenue that you generate, and it's a little more sophisticated than that. But the idea is that if you were spending $2 on sales and marketing in sales and marketing personnel to generate $1 of revenue, that'd be horrible. Some companies do that until they grow, into themselves. But so Joe does a good job of that. But he also is very precise about tracking, for instance, gross revenue per rep per quarter after the rep is productive. So this is a very sales-driven company. I mean, 2/3 of the employees are R&D, but what you see on the outside are shiny sheet salespeople that walk into big brands and sell them ads that drive people in the store to buy products. So they're very I'd say sophisticated about having great metrics for not only what's our average sales rep generate in new revenues per rep per quarter after they've been at the company long enough to be what they call a productive rep, someone that's been there probably 3 to 6 months. But then they'll even track it by cohort year, so they'll figure out, were we better some years than others at hiring certain reps. They'll also drill down into cohorts by source. So did the reps we hired out of Yahoo turn out to be better reps than the ones we hired out of DoubleClick? And so Joe's that by the way, that data is super interesting. Just the fact that I know as a board member that they drill down to that level of detail to figure out, because what they've learned is they've learned all kinds of interesting attributes for people that end up really making it and thriving at MaxPoint. They learned that about people that don't. Another interesting attribute they learned about ad sales people is you never, and this is kind of funny, I think, they learned the hard way their first year that hiring ad sales people that are available in the middle of the year is almost always bad. Because those superstars always stay till the end of the year because they're crushing their plan, they're going to make quota, and they want to stick around to be there for the winnings. And so what you want to do, what they learned the hard way, because I think in 2011 they washed out a lot of salespeople, they've learned you got to start recruiting aggressively in September, get to know everybody well, pick your best candidates, try and close them in kind of December, January, and onboard them in February for the rest of the year. And then after that, now there's companies well known enough and their brand is meaningful enough that they have a pattern now where they can bring people in almost year round. But for 3 years they pretty much would start hiring aggressively in September, cut it off in January, and they would hire no other people after that because they'd had this really bad experience. And they swear it's because the good people want to finish the great people want to finish their years. Has anybody else had an experience like that?
That's really true in the banking industry. I know.
Is that right? Right.
That's a huge deal for us. We wait for those yearly bonuses to happen, and then begins.
Yeah. And it sounds horrible, like, gosh, these people are so coin operated, but you know what?
They are.
People work really hard
Salespeople
to make their plan.
Good salespeople are.
I mean, it's let me just see if there are any. And the last thing. So Joe, I'd say, also does a nice job of kind of previewing the next year in the January meeting. By the way, he will preview most of this stuff way before the board meeting. So he'll call people individually like me and say, hey, here's the deck. It's just like classic good communication strategy. You don't present in front of a full board, especially if there's anything surprising. So Joe will send the draft, call me up, say, hey, did you read it? Any questions? So classic good meeting management skills. So then in this particular, again, this was January 2014, he kind of went through an overall summary of the year, strategically expanding into what he calls agency and shopper marketing, heavy investment, so he added 56 people in engineering and analytics, which for them was a lot. And adding people in the finance team. This was the year before the company filed to go public, so we could see that coming, and we had to do a pretty major upgrade of the finance team. We'd had a solid VP of finance, but we did not have a take it public caliber CFO, which they hired at the end of that year. And so then this slide shows you what Joe's key hires were for the executive team for the year. So we didn't hire all these, by the way. We did hire a really great CFO. We did hire a great director of HR. We've not yet hired a CMO. We did hire the last two. So this was as of 15 months ago, yeah. So Joe does a pretty good job of trying to tell us who are the key executive hires, and then instead of going into these in a lot of detail, what he would then tend to do, which my better companies do too, is we would kind of take the process of figuring out who are we looking for offline, and Carrie's seen this because she's Hope and Todd, you guys have helped us. Most of my companies will, if they've got their act together, they'll write a job spec, and then they'll run that by the board, and then they'll often go through a process where they try to recruit without using a search firm, because startup entrepreneurs bristle at the notion that you're going to spend what you're going to spend on a search firm. And so do we, right? I mean, if we can avoid spending those kinds of dollars and we know someone in our network, or then we'd rather do that. But then they'll usually keep the exec team pretty looped in, or the board pretty looped in on these hires. So I was very involved in recruiting Brad. We did hire a search firm. We hired Schweikler to recruit the CFO to Max Point, and then but when we got down to and I was pretty involved in helping Joe write the spec, just because I've been through that process before. Worked with great people like Paul Bialik, so I knew what a good CFO looked like. And then so we often will try and help with the spec, and then we'll help push the CEO to make the decision on hiring a firm if it's taking too long. And then we're usually involved in interviewing, and then we're usually involved in helping structure. We don't structure the package, but they'll usually run it by us. Most of our CEOs, we don't demand, but we like it when they run executive comp by the board. So we don't expect to be approving salaries and option plans for the whole company, but anyone that's a C-level executive, usually it's good process, and frankly, it's good for the CEO to have a checkpoint to check in with somebody else. To make sure that the comp plan they're recommending makes sense. So I feel like I've done super fast and a little bit rapid fire and kind of random, but maybe I'll pause for a second and see what. Is this helpful?
Yeah, there's a lot of
Really
recruiting
helpful.
in that deck. I mean, even looking at the past slide,
Oh,
I'll
yeah.
have 2014 highlights, like 4 out of the 5 bullets
Yeah.
were directly related to recruiting.
Yeah. And Joe really gets it. I mean, of my CEOs, some are better at really understanding the importance. By the way, all of them understand the importance of people. So without question, like every one of my CEOs knows that, like, we're not building cars where what matters is that we have a plant with a smokestack and bearings and conveyor belts and stuff. Like the company is people. Like our ability to create product is people. The ability to sell it is people. You know, it's all people. So they all get that, but some of them are much more systematic about how they think about bringing in talent than others. And Joe is, you know, one of the better ones, I would say, in terms of thing. And he was at eBay. He had 3. He was at 4. Then he was at 3Com. Then he was at eBay. But he was at eBay when they went from about $1 billion in revenue to 5. So he watched them grow very quickly and just had a sense for how much you have to plan ahead. You know, he and I are on the phone a lot about what I just call the mitosis effect, right? I mean, if a company can go, if one person can manage 6, then roughly, then you know your companies go through this mitosis where, you know, from one person to 36, you don't need more than 1 layer, right? You just need some people underneath you, and then those people can manage the people underneath them, and you're fine. But you know, when you multiply the 6 times 6 again, then it's you know, or you multiply each of those 6s by another 6. You know, that phase of growth when you're going from kind of 30 employees to 200 or so requires a whole other layer of management. And then, you know, Joe's going to go through the next phase right now, right? Because he's at sort of 350, so he's gone from, you know, he's now got C-level people, VP level people, director level people, and manager level people, and then people underneath those people. And so most of our CEOs have never been through that before. They wait too long to realize that someone isn't scaling. They themselves might not be scaling, right? And so they wait too long, and then they're really nervous about becoming a big bureaucracy full of layers, and which is a good bias to not want that. But on the other hand, you know, like Joe, I think really has figured out that, boy, I've got to be thinking a couple of years ahead. All my executive staff now, I need to be asking every day, am I doing everything I can to make sure they're going to scale for where we're going to be in a year, and are they doing that at every layer? And that's a huge place where I think you all can help, right? I mean, some of you may be more involved in recruiting than HR, but I think helping your CEOs and all the leaders underneath them learn how to evaluate their people, not just for the jobs they have now, and not just for having more people under them, but the complexity of it. It's not just having a bigger job, it's having a more complex job. And Carrie's done this so many times. But I think Joe's especially good at kind of trying to plan ahead that way. But not all of our CEOs are, because most of them haven't been through it before.
Is there a way in the context of a board deck to kind of show the board those different layers and how our ratios? What we've seen is like the hiring slide update is plan and actual, and those are just numbers. It doesn't tell you anything about the structure of the organization or how layered the org chart is. Is there a ratio or a metric that can convey that quickly to you guys where you could use what you know to advise the CEO? Like, you might want to start thinking about layering it some more.
Yeah, that's a great point. So this particular deck doesn't have an org chart, but most of our CEOs will go through an org chart, and if they're going to make some changes or are thinking about it, they'll display that. They'll also, although a lot of them, I think it would be smart to walk us through the organization before they're thinking of any changes, just to get our insights and input about it, and get your insights and input about it, right? And part of it's addressing what I just talked about, is where is it just clear that people are going to outscale themselves? And then the other classic problem that a lot of these companies have, as you guys know, is that not everybody that's a great individual contributor naturally scales into being a great leader and manager. And it doesn't mean there's not an awesome place for them in the organization, and yet we've kind of trained people, it's kind of maybe a good topic for a blog post, we've kind of trained people that to grow in the organization, you need a bigger job with a bigger title and more people underneath you, right? And that can be just a horrible mistake, right? I mean, some engineers are amazing architects and individual contributors, and they may think that the best role for them is to lead and manage people, but they A, may not be good at it, and B, may not even like it. But if you kind of train them that that's the only way to move up in the organization, then you know, that's an issue. Same thing with salespeople, right? I mean, a lot of our companies will hire a great first salesperson who really believes they can build a 50-person sales team, and sometimes they can, but that's a whole different set of skills. So working with a CEO so that they are realizing ahead of time not just how many people, how many people can my people manage? That's a simple math exercise that any of us could do. But, am I thinking about moving the parts around so that people scale, and so that people scale without losing them, right?
Yeah.
That's, I think, the really tricky part is how do you take someone who, how do you take someone who's grown in their ability to manage people because they've been able to go from managing a 3-person team to 7. How do you keep that person, but if you know that you're going to grow to a 50, 100-person team, how do you keep that person, make them feel good that they will have a long-term career path and will be able to keep growing, but hire over the top of them without them feeling like, well, gee, I thought Len was loyal to me and worked really hard, and now he's hiring Bob, and now I have to work for Bob, and I like working for Len, and I don't trust him anymore. How you guys coach your CEOs on how to navigate that, I think is super important.
Do people have a lot of opportunity to coach your CEOs on that? Like, are you guys finding that? Are you having those conversations?
I would say I don't actively pursue having those conversations. Our CEO is pretty good about coming and asking when he wants input before making a decision. But I also don't know how many decisions he's making that he didn't ask input
Sure.
on. So
I know you have to.
Yeah, I've got a couple more minutes.
Okay. One thing first about this deck is there's not a lot of stuff in it that I would overtly say is negative. Right? And
These guys
there's-
have been crushing it.
No,
That's the problem. I have some of those.
Clearly they are, but I'm asking because I'm wondering. There's always
Yeah.
right? A, and so B. How do you? I think you alluded to it earlier, but how do you like to hear about the?
Yeah.
This is a problem kind of problem.
Chloe again. I won't try and pull up the deck, but so Joe is really good. So we love Bad News Early. I will send you guys a blog post about.
I'm sorry, I have to leave, but I just want to say thank you. This has
Oh,
been
sure.
amazing, really helpful insights. So it was
Thanks,
nice to meet you.
Stacy.
Thank
Good
you
to
for
see
your
you.
time.
So I'll send this to you. This is old. It's 4 years old. You had different colored hair. But this is a pretty decent. If you just keep using your high school photograph, it works really well.
And then later it's easier to sneak out because I don't know who you are.
Exactly. So I wrote this for TechCrunch, and I think it's okay. It's got sort of my top 10 things you should do to
Great.
work with your board. I'll send this to you guys. But yeah, I think bullet. Let's see which one.
And is the audience for this entrepreneurs and CEOs?
Yeah. Yeah, I think there's something in here about bad news must travel early. Yeah, so we love, just like any relationship, right? If something's not going well, we want to hear about it as early as possible. And like Max Point's had plenty of, rough periods, as has every one of our companies. But no, probably like a lot of companies, most of mine use this sort of strengths, weaknesses, opportunities, threats, SWOT analysis to kind of frame how it's going. And Joe will often do that. And that's a great framework, a simple framework for just explaining what's going well, what are the risks, what are we doing about it, what things aren't going as well. Martin, who Martin has an incredibly detailed, it looks like that Consumer Reports thing, the little bubbles with like it's 3/4 filled in. He does that for all the quadrants of the bit, and it's red light, green light, yellow light. So that model works really well. This just that happened to be a good year for Max Point. So, but most of our companies do a really good job of kind of framing kind of strengths, weaknesses, what's going well, what's not.
What's the number one complaint the CEOs have about the recruiting functions, other than not enough engineering talent?
Great question. I think most of our CEOs don't. I think the common complaint I often have is not being organized enough about going after candidates in a really aggressive way at the executive level. Like I'm smarting from this experience that I shared with Carrie for one of my companies that wasn't really ready to go do a search yet, but they know they need to for an executive position. And so they hadn't written a job spec, and they hadn't been organized about exactly what they were looking for. They're pretty new at hiring this kind of a person. They've never really done it before in any of their careers. And a candidate kind of came out of nowhere. It was a free agent, kind of a unicorn candidate, and we didn't get him. And another company did. And then we were talking about it last couple nights ago, and we just didn't put our best foot forward. We didn't have a tight spec, so the candidate had a lot of questions about the role and whether it was really what they wanted. And then I don't think we recruited as well. And this is maybe less a critique of the recruiting team, but I think sometimes recruiting teams need to make sure our CEOs really know how to sell. I think one of the skills that you have to have at a startup is you've got to be able to persuade people to go leave these incredibly safe, well-paying positions to come join the circus, and it's hard to get people to do that. And so I think sometimes I'll see us settle for candidates where I think, boy, we kind of settled for a B+ there. And I hate saying that, but you kind of when the candidate that you really wanted but couldn't get passes, and you end up taking the person that's, and you can say, oh, my company's not doing that. Okay, well, good for you. It sounds like you've got an amazing company. But I have a couple companies where I think we took a really strong B+ candidate instead of the A, and I think we could have put our foot forward better in terms of maybe comp, but maybe just the way we went about courting them.
Do you have any thoughts on how to combat that? Because I find that often recruiting is sitting behind the scenes saying, hey guys, we need to pull this together. This is how we need to approach it. But there's a little bit of a resistance at the executive level, feeling like, well, this is an executive level candidate. I know them through some other channel. I'm just going to kind of do it my way, not follow kind of the structure.
I think it's great. I think part of the role you can play is kind of that pressure relief valve.
Mm-hmm.
Like I think if this particular company that lost this candidate I mentioned had a person that was sort of the recruiter. I know we had a very effective, remember Karen Schlemmer at Real? So we had an in-house recruiter. She was awesome. And she was just, candidates would tell her stuff they wouldn't tell me or tell Rob or tell David, and so I think going to your CEO and just saying, look, I can be kind of the consigliere behind the scenes. I mean, they know you're there to try and recruit them, so they know you're biased too, but it can be hard to tell you the person you would go work for no, or tell them what the real issue is, or maybe it's something that you're just uncomfortable with. Anyway, I think persuading them that, look, I can be a second set of eyes and maybe kind of a back channel for the real reasons that a person's not getting there. Because I think it's super helpful if you've got the right person. I got to hop.
Len, thank you so